you see, to answer your question first, I need to get to Google forum. So you said that you wanted to know how to enter or something like that, right?
Yes.
So h- how long have you been trading ICT first?
About
ICT concepts.
year,
1 year
year
ago.
ago.
So do you know how could you identify the bias of the day, the directional bias?
Bias.
Yes,
Yes, yes, yes.
the IF. I could we could use this, the today's chart on EU, right? So
Okay.
so at this point on today's chart, what we see Dutch price. If we go to the daily time frame, we see Dutch price is closing like this, as the previous day has closed as a bearish contraction. There is a higher chance that this day is going to be an expansion but lower, because price has reacted from this fair value gap right here, I guess, on the daily time frame right here. If you see, we have a fair value gap here just above the volume imbalance that price has reacted to, and we have you know this reaction. Do you hear me?
Yes, yes, I'm here.
Yeah. So on the 4 hour time frame, we see this price has take this highs here, this buy side liquidity above these highs. But if we check the dollar, we see that the dollar didn't check this low here. So we had an SMG between the dollar and the fiber. So we had a divergence that is confirming bearishness also for the for fiber. That price it is gonna drop lower, at least to check this sell side liquidity, this equal lows. Then we're gonna see some drop lower to fill this 4 hour CV that is inside the big 4 hour on the daily time frame, right? On 1 hour time frame, what we have this day, for this day, we see that price. This is for me. I saw that price has taken this buy side liquidity on London. So then it drops lower, breaking market structure. I took an entry here. For me, I use this range, I use this high here and this low here, right? If we go to the 15-minute time frame, I use this one. Price has taken buy side liquidity above these equal highs, then drops lower, breaking market structure. Then I use this high and this low. I took a buy entry, a sell entry at optimal trade entry with this value gap right here, with stop loss here. Why did I push my stop loss here? Because I believed if price check this high, there's a higher chance it is going to be bullish, as price it did check the sell side liquidity below these lows, and it is going to be a break of market structure to go higher. And also this high has been a high resistance liquidity run. I mean by that, it's already taken buy side liquidity above this high. So if price check this high, there is a higher chance that it is going to continue higher. So that's why I wanted my stop loss to be here. Did you get it? Hello?
Yes, yes, I'm here.
So when I wanted to enter this entry here, I used the 1 hour range. I mean by that, I have my bias from the daily and 4 hour where price is going. Then I use my hourly range to frame my trade, to see where is premium and where is discount. If you see that once price it took this low here, right here, this low here. First it took this low, right? Then we have a retracement and it failed to make a higher high, then it drops lower, taking another time this low. Then we see another retracement to this mitigation block, right? Then price has dropped lower. I use this range here, I use this high to this low, and we've seen that price has retraced again to premium of this range. If you see, price has retraced again to premium, then it drops lower, right?
Yes.
Then I entered at premium of this range from at this fair value gap here that it was at optimal trade entry. So I have overlapping confluences. We have the fair value gap, we have the optimal trade entry, and we have also the order block. First, what I use the most is the fair value gap. I use the fair value gap, and I like the ones that are, with optimal trade entry. So if I buy a fair value gap with optimal trade entry, I'm either buying a discount, or if I buy, I am buying a discount, and if I sell the fair value gap as optimal trade entry, I am selling the premium. Do you see? By default. Do you understand? I'm because like ICT says in his videos that if you want to look for buys, you should look for buys at discount, and if you want to look for sales, you should look for sales at premium, right? So when I use a fair value gap at optimal trade entry, I am by default using discount and premium ranges. Do you understand this?
Understand,
I
understand.
mean, if there was a fair value gap, for example, I'm looking for another, like this one. There is a fair value gap right here, and this big one. There is a higher chance that price could just tap through this fair value gap, then drop slower without any retracement to premium. But I don't like it. If I wanted to trade this one, I'm gonna use this range. I'm gonna use this high to this low, and I'm gonna wait for optimal trade entry, or at least above equilibrium, right? As premium range. Then I'm gonna put my entry here with stop loss there and target this low, right? This this is gonna be my entry. I always target 122, so I'm gonna target 122 just below this low. But I know for sure, because we are trading with the higher time frame bias, I know for sure price it is easily gonna drop lower, right?
Yes.
At this point here, this is a good entry for me. Do you see? Because it is at premium of this range, and it is also filling this fair value gap right here. But when I'm gonna say, okay, price has filled this point, then it starts dropping lower without filling me in. At this point, there is two things. Either price is gonna do something like this, check this low. I'm gonna wait for this low to be taken. Then maybe there is a fair value gap that is gonna fill and drop slower, or maybe we're gonna have a new range. So at this time, you choose. Or maybe we're gonna have a new range like this from this high to this low, a new premium array, a new premium ranges that I should wait maybe for price to retrace to, then drops lower. There is two scenarios for that. Either price, if price shows a strong momentum, so let's assume that price has dropped lower, very quick and fast, showing a strong momentum, there is a higher chance that it's not going to go above this highs, and it's going to use only this range here. Yes, at this point here, if you see I took a loss, right? Then price has went in my favor. But the dollar here, it never took these lows here, this low here, and the London low. If you see the fiber price had check the London's high, but it didn't check for the dollar. It didn't check the London's low here. So we have another SMT. We have another confirmation that price it is bearish, and then price has did something like this. It went higher, creating an equal highs, then retraced to this fair value gap to go higher. If I use again, let's see. I have this range, or if I use this range here. If I use this one with this fair value gap, price chop us into optimal trade entry and goes higher. Why I am gonna use this range here and not this one here, not the biggest one, this one here. Where is it? Ah, okay. Why I'm gonna use the smallest one, not the biggest one? Because if you see the biggest one, it did never retrace to discount. Because first of all, price has made a higher high, just slightly higher high above this high, and the move has started from this low here. The price has filled this order block right here, then it went higher. I'm gonna use this range instead, and I know for sure at this point if price drops lower, taking this low here. So at this point, if price drops lower, taking this low, there's a high chance that price has shifted to continue lower. Why I'm gonna consider this as a break of market structure that price is gonna drop lower and not just a sell side liquidity taken? Because we are already in premium of this range. If we use the 4-hour range, what we see that price at this point from this high to this low, we're going to see that price is already at premium. And also at 15 minutes, we're going to see that price has already taken buy side liquidity above this high. And if price drop lower, taking this low, we're going to have a confirmation that price it is bearish. So that's why we are using this range, because this one here, it is going to confirm the bearishness, the invalidation of the bullish scenario. So this is the largest low that I can call it, the largest self-defense, the defense line. That's what I wanted to say. This is a line that is going to defend the our idea to go bullish, right? Hello, are you there?
Yes, yes, I am there.
I'm trying to look for another entry scenario.
If I understand you,
Yeah,
your entry is on the fair value gap
yeah.
and OT.
And OTE, optimal trade entry. Yes.
OTE, yes,
Yeah.
optimal
But
trade
but
entry.
when I'm using this after price, so if we I'm gonna show you something very helpful. Let's start from the beginning, okay?
Mhm.
So let's assume this is the daily range, right? Price it is making higher highs and higher low. We have a low, a higher low, a high, a higher high, right? Inside this range, we could have 4-hour range, right? We could have 4-hour range inside this leg, this impulse leg. We could have something like this at lower time frame, right?
Yes,
Let's assume the black one is the daily, and the blue one is the 4-hour. And also
okay,
inside this blue one, we could have something like this on lower time frame, right? Maybe this is the 1-hour time frame, or this is the 15-minute time frame, right?
hmm,
So what I do at this point here, I know the daily is bullish, right? And I know the 4-hour is bullish. So if I want to be bullish here, let's assume that we don't have this. We have only this one. We have only this price action, right? Just give me a second to make it very easy to understand. Let's assume we have something like this, right? Do you see it? So the
yes, yes,
daily, we have something like this. The daily is going higher, right? And we are waiting for price. We are expecting that price has dropped to some kind of premium here. If we use if we use our Fibonacci level, we're gonna see that price has dropped to optimal trade entry, then it is going higher. Before price going higher to do this, before price it is going to do this, here at this point I'm waiting for a break of market structure. So we're gonna see some kind of 4-hour drop in lower, right? Or 1-hour time frame. This is this red line, the orange line, it is gonna be the 4-hour or the 1-hour, right? So price has dropped to discount, and what I want to see, I want to see a break of market structure above this high as a confirmation that we are bullish. Otherwise, price could just continue lower. Do you understand this?
yes,
So I want to see some kind of break of market structure above this high, or otherwise price could just continue lower because we don't pick the low. So if once price it is retracing, we don't say, okay, we have our level here, so let's start just buying. If I do this, if I just start buying here, my stop loss should be below the range. If I do that, I'm not gonna buy here and push my stop loss below the level. No, because price could just easily take me out and then went higher. But if I wanted to have a lower stop loss, I'm gonna wait for price to break market structure here. And what we're gonna have? We're gonna have something like sell side liquidity taken, right? And we have a break of market structure above this high. We have sell side liquidity taken below this point here, some some stops taken, then a break of market structure.
Mm-hmm.
So what is this line, the orange one? It is the hourly chart, right? Inside this point, because price is this fracture, we're having the same thing here. I'm waiting for price to drop to discount ranges, right? I'm waiting for price to drop to discount ranges, something like this. That's what I'm waiting for. Then I'm gonna drop to 15-minute time frame. Once price it is at discount at optional trade entry, maybe we have a 1 hour BC somewhere here, right? Maybe we have a 1 hour BC. If I am a day trader, I'm gonna wait. If I am a swing trader, I'm gonna just enter at this 4 hour BC, then my stop loss below here, and I'm gonna target these highs here, right? If I am a swing trader, and this setup is gonna take sometimes days to weeks, right? Because I am entering based on 1 hour time frame. I'm targeting a daily level, not only an hourly level. I'm targeting a daily level, right? Do you understand this as a swing
Yes,
trader?
yes.
As a day trader, I'm waiting to have a refined stop loss. I mean, I'm gonna go to the daily time frame, right, to the 15-minute time frame, and I want to see something like this. If I change the color for the daily time frame, maybe green, if it is, or yeah, do you see green? Okay, I want to see something like this on the 15-minute time frame. If I zoom in, if I zoom in at this point here and drop at 15-minute time frame, I want to see, maybe I do something like this. I want to see price. Where is it? I want to see some kind of consolidation during AJ range, then some manipulation to lows, then some break of market structure above this high, then an entry at a fair value gap to go higher. Sometimes this fair value gap could be somewhere here, this 1 hour BC. It doesn't matter if it is the same one here or here. Just we're gonna have some kind of Asian range, you know, accumulation, then manipulation. So the price is gonna open here, somewhere here, right? So this is the open. If I change the color, so price it is gonna open here, and we're gonna have something like this, as this is the open, the, the, the midnight open, right?
Uh-huh.
At New York time, this is all New York time. We have Asian range. I'm waiting for some kind of manipulation to lows, right? And price has tapped us in to our our discount PD array. Then we have a break of market structure above this high. At this time here, what I want you to do, I want to see if there is a fair value gap left between this low to this high. I want to see if there is a fair value gap. Maybe we have a fair value gap here. Maybe we have some fair value gap here, and then some here. If I can't do that. But I have a fair value gap here and I have a fair value gap here. Which one I am gonna use? I'm gonna use the one that is with optional trade entry. So I'm using again a Fibonacci levels. We have this range from this low to this high. I wanna see price retrace to discount of this range with optional trade entry. with this fair value gap and put my entry here, right? And stop loss here. But where is my target at this point? My target is not gonna be, yeah, it could be this high here, as I said on the swing trade. But first, I'm not targeting this high. I'm targeting this high here, just this green one. This is the first target for me. Then I am targeting what? I'm targeting the premium of this range from this high to this low, right? Do you understand this? I'm targeting the premium of
Understand.
this range, take my partials here. Then if price is really bullish, and it is bullish because price has dropped lower to discount, then I break market structure, price drops again to discount, then an entry at discount, and because of that, price there is a higher chance that this entry here with smaller stop loss could just go to take this high. It's gonna take times, but it is gonna be a day trade that it becomes what? A swing trade. But you shouldn't say I'm gonna hold it to this point because this one is a day trade, and you should just took your entries, your partial, most of the partial from this high here to this low, inside this range, then above this high, right? Because
Yes.
because once price take this high, what is gonna happen? So like I said, this is a 1 hour time frame. Once price is gonna check this high, changing back to our color, I guess. Once price is gonna check this high here, it's just gonna do something like this. Check the high, then it's gonna drop again. Give me a second. My
On
mouse.
which time frame you entry?
I enter at 15 minutes, 5 minute time frame.
50 minutes.
15, 5 minutes.
50 and 5.
Yeah.
Okay, okay.
So because I am a day trader, if I was a swing trader, I'm not gonna enter at below 50, below 1 hour time frame. My largest time frame is gonna be 1 hour. If I am a swing trader, do you understand this?
Understand. Understand.
If I am a position trader, I mean by position trader, my trade could take months, maybe 2 months, maybe 3 months to give me my profit. I'm gonna use the daily time frame and 4 hour time frame as entries. If I am
Understand.
scalper, I could enter below 5 minute time frame if I use scalping methods at that time.
Okay. One question. Which session you trade?
For me, I trade every session. I
Every.
trade, yeah, I trade London and New York, both of them. But I
Okay.
use kill zones. I mean by that, if you just remember that I said here we have agent range, and I want to see lows to be taken at London, then break of market structure, and I could enter here. If we check this one, this range at 15 minutes, what we're gonna have? We're gonna have something like this. Because this is the end, I'm gonna have something like this. Just give me agent range right here. We have price maybe took the highs, then drops lower, took the lows. Manipulation maybe the first highs first, then drops lower, check the lows. Then we're gonna have something like this. Let me just to make it here, right? At this point, I have my agent range. This is maybe the agent range. Let me choose, change this. Maybe this is my agent range. This is agent range, and this is New York kill zone. I'm waiting for London kill zone, right? This session. The session begins from the open from the midnight to to I guess to, if I remember right. I don't have my notes with me now, but I remember the session is big from midnight uh to New York to London launch, I could say, right? But we have this session, but we have London kill zones. I mean by London kill zones is a part of London session where we look for entries. Do you understand this?
Understand.
The
Understand.
London session it starts from here to New York open, right?
These lines, that is
These ones,
session.
yeah, they are sessions. This one,
Okay, okay.
the blue one is London. The black one is agent range. The green one is New York. Just they're using me to see where what session we are. I'm using I'm using kill zones. A kill zones is a part of time at London at a session. If I am using London kill zone, it is a part of time from London session, right? So at this point, the London session starts from here, but I don't enter at this point here. I don't enter between this time here to the London kill zone open. I don't enter. I'm using it to see where price is going. Is price gonna check this high here, then just continue higher, or maybe it is gonna check this high, then drop slower, or maybe it is gonna drop slower, then continue. Do you understand?
Understand, understand.
So once price do this, and I have a break of market structure, this entry here, it is inside kill zone, London kill zone. I'm gonna enter at this point. Why not? If I have,
Sorry, 1 minute, please.
yeah, sure, sure.
Is a storm outside. 1 minute to my dog put
Yeah, 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 sure,
the
sure, 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 sure.
please.
Yeah, yeah, I'm waiting for you. Don't worry. Let's continue. Okay. So if you see, my entry was during London kill zone. There is no wrong about this. I mean, I enter at London kill zone because I am available at that time. Do you understand?
Understand, understand.
Because my time here in Morocco, I can't trade London kill zone. I can't trade it, it's not at bedtime, it's not, it's the morning. I can't trade London kill zone, and I can trade also New York kill zone.
Okay.
But if you can't trade London kill zone, just don't trade it. You can build your model only for New York kill zone, and you can make a lot of money, and you could use London kill zone as a confirmation where New York it is gonna go. And mostly London, it is a manipulation. This is mostly when I'm talking about this template here, this daily template, it is the 70% of the time that we're gonna have this template. We have other template that price it is gonna do, but they have lowest probability to happen. This one is the most probable one, 70% of the time we have this as agent range consolidation. Then at London, we have some kind of manipulation low of the day and break of market structure confirming this low of the day. And we have an entry here at option match at the entry. If we use again option match at the entry, right? Then we have a fair value gap. Sometimes we don't have a fair value gap. We have an order block, we have a mitigation block. But for me, I use those. But the priority one for me that I use is fair value gap, because the fair value gap it is the what is called the IOF. The market is booked on fair value gaps and and liquidity. The market is booked from on liquidity, from internal liquidity to external liquidity. And what is internal liquidity? Internal liquidity, they are the fair value gap. They are the inefficiencies, if they call like. Do you get me?
Yes,
As a
yes.
fair value gap, it is a liquidity there, right? That price has to
Okay,
fill that liquidity to go higher to an external liquidity. This swing high as a buyer said above that external liquidity, right?
okay.
So at this point
Your
here,
target, what is your target? That
yeah,
equal low,
I'm gonna
equal high?
yeah, I'm gonna show you my targets. I did tell you some of my targets here using this range here, right?
Mm-hmm.
Yeah, I'm gonna show you. At this point
Okay,
here,
okay.
I have this my entry here, right? The London has expanded higher. At New York kill zone, at New York London kill, at New York open kill zone, this let's assume this is London kill zone. I'm waiting now for New York kill zone, right? This is London, this is New York.
What is name this
What?
lines indicator for zones?
It is called ICT kill zones. This one, ICT kill zones.
ICT
Kill zones.
zones.
Yeah.
Great, thanks.
So this is London kill zone, this is New York kill zone. At New York kill zone, if IOF is bullish, right? If price is bullish, and I'm expecting price to have another optional trade entry, something like this, either from this low to this high or from this low here to that high. If this range here, once price it took this high here, it didn't retrace to its premium, so I'm going to use this low to this high. But if this price has retraced already to discount, I'm going to use this high here, right? I'm looking for another trade entry as optimal trade entry with stop loss here, with target again above this high, then 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 premium ranges, and I have a fair value gap right here. Maybe a fair value gap, maybe an order block, maybe a mitigation block, maybe this mitigation block, something like this. Dash price has failed, but I'm always try to enter a fair value gap if I have one. If I don't, I look for order block. Do you understand this one?
Okay, I understand.
So this one, but let's assume that the IF is bearish and price has already went to some premium PD array, maybe a fair value gap here. If we have something like this, I'm expecting on New York to have a reversal for price to drop lower. That's what I'm expecting on New York. But for this scenario here to happen, we need to be bearish as well. Price is already bearish, uh, is already making what is called lower highs and lower lows. Do you understand? So price
I
has
understand, understand.
has make a low, a high, then a low, then a lower low, then a lower high. So price it is already bearish to look for New York reversal, right? But
Yes,
if price is bullish, why I'm gonna look for New York reversal? There is no sense. I'm just gonna look for a continuation if price is bullish. Gonna look for something like this if price is bullish, right? So we have this as targets, like I told you, as target. Maybe we have some equal highs here. Who knows? Maybe we have some equal highs here. Maybe we have some consolidation here. Maybe we have some maybe a fair value gap here as premium if we use something like this. If we use this range here to this high, right? We maybe price has dropped to discount, but we have premium something here, some fair value gap here. We could just enter here. We could enter our levels, right?
mm-hmm.
Then target this fair value gap, took our partials out, then target this high, then took our partials, then target this high. We don't say, okay, price has went to this fair value gap, let's sell. No, we don't do
I
that. Why?
understand, I
Why
understand.
I'm gonna sell? The IF is still bullish. I'm gonna keep targeting these highs here. But what I target for me, what I usually target is two things. I target fair value gaps and I target internal liquidity. Like I told you, the market is booked on liquidity. It moves from external liquidity to internal liquidity and vice versa. I mean, it can move from internal to internal to external to external and external to internal and internal to external. I use this.
Yes, yes,
So
understand.
what is the internals? They are the fair value gaps, the BC, CB, volume imbalance, the liquidity void, those kind of things, those inefficiencies in the market. What is the external liquidities? External is this swing high, swing low, equal highs, equal lows, the highs, the buy stops and sell stops, right? That's that's the equal that's the external liquidities. So when
Yes,
when price drops to an internal liquidity here, I'm always expecting price to check an external liquidity. And when price check this external liquidity and shows some signs of reversal, I'm expecting price to check some kind of an internal liquidity. I could check some sell here to an internal liquidity here to again to check a buy entry to external liquidity. You know, so we have an internal liquidity. Price has dropped lower after price checking this external liquidity right here. Price has dropped lower to an internal liquidity, then it went higher to an external liquidity, then it would drop slower to an internal liquidity. went high. The market is booked on liquidity. Maybe price could, from this point here, price could drop to internal liquidity, to external, but then fill the internal, then continue lower to check the external. Right? It could do that. That's why we need, once price it is our level, we need to see some kind of confirmation that price it is indeed going higher, not just price, that price, okay, it's here, let's buy. No, we don't do that, because if we do that, we are trying to pick the low. We are trying to force the market to say, okay, you are here now, so let's choose this as the low, and let's enter. You are forcing things if you say, if you do this. If you are buying here without a confirmation, you are forcing the market to give you this as the low, and and the market is not going to do that. The market doesn't comply for anyone. The market is the market. Is going to do whatever it wants. Do you understand? Because
Understand?
what is the market? The market is a group of traders. Is a group of buyer and sellers, right?
Yes.
Trying to do those transaction between them, right? Buying and selling. But those traders here, they are not working for you to say, okay, mister, let's have this as a low and let's start moving. They're not working for your interest. They are working for their own interest. They are trying to make money, right? So they're not gonna listen to that price. That is gonna that price, this one is it is gonna be the low. So what you have to do is you're gonna wait for the market to give you signs that it is gonna be the low, then enter your buy entry here. And what is our entry pattern is price check some sell side liquidity, checking all the early buyers trying to buy here, the ones that think this is the low, you know the ones they went here and keep buying, thinking, okay, the market should be the low. Then we look for to check them liquidity, steal their position. If we took them, we are trying to steal their buy position by taking them out, and then we're gonna look for our entry going higher. Do you understand? but
Understand?
but
Understand?
if price doesn't break market structure above this high, we're not gonna buy. We're gonna keep waiting for break of market structure. Otherwise, price could just continue lower doing something like this. Our entry is this pattern here. I like it to see it on a fair value gap at discount or at optimal trade entry. So this is the thing.
Wow. Sorry. This is big store. I
I
must
understand.
I must end. Uh, Sorry very much because it is out there is amazing store.
I understand. Is it gonna hurt you in some way?
Please, please.
Yeah.
Okay. Thank
Okay.
you very
You could
much,
see it.
Summer.
Talk to you later. We're gonna continue
Okay.
later. See
Bye.
ya. Bye.